We all know trading is hard, but doesn't have to be. When you analyze the market, take a trade, then lose, we all know how that feels. Your emotions rile up. You start feeling lost inside, like you don't know what you're doing. You start feeling like you have no direction, and if you continue like this, you are going to blow your account. This was my exact situation a month ago. After reflecting, it turns out that my problem was staring at me right at the face. Before this video continues, I just want to remind you to do something very important, is to subscribe. Thank you very much. I wasn't exactly trading a proven system. I overlooked the importance of keeping detailed records. To make you understand this, let's look at this example. There are two traders, trader A and trader B. Both of them have been trading for over a year. Every trade trader A takes follows the exact same pattern that he got from studying his own trading data for over a year. While trader B trades that same pattern off head but does not have his own personal trading data that he studies. Which one of these traders do you think is consistently profitable? If you said trader B, you were dead wrong, and I know this because I was trader B. I solely relied on my memory and my ability to identify patterns for executing my trade, but I didn't have the records that gave me sufficient logical data that backed my trading decisions. Keyword here is data. I mean, I did journal, but not in a way that gave me the information that answers the questions that always troubled my mind anytime I'm faced with a possible trade. That caused my trading to lack a very major ingredient: conviction. I would totally avoid taking a trade at a certain time just because the last time I traded at that time or that session, I lost. And just because of that loss, I made it a rule to not trade that time again. And I stuck by that rule because I was being disciplined. But I didn't have enough sample size of tested data that shows that that time was actually wrong. I started to doubt my entry model, which made me start looking for other strategies and other models. In other words, I was strategy upping. I talked more about this experience on my last video, so do well to check that out. Came to the realization that I need to get my shit together. The first thing I did before I started this process is I wrote down the questions that I needed answers for. The questions that always plagued me, caused me to fidget or hesitate while executing trades. Questions like time of entry, entry model, how long I should be on the trade for, and stuff like that. These were the main questions I had, but I ended up discovering way more during this process. And this is why you should stick around, because this is crucial for every trader to know. I know that this video will change your perspective and how you see trading, and it will shape you into a profitable trader. So what most people call journaling, I rather call it bookkeeping. Because when you think of journaling, you are thinking of something like a diary where you write your emotions, write your feelings, and observations as well, which is good and fine. Yes, it's important to note how you feel and your thoughts during a trade. But is it actually giving you effective trading data on your actual setups? I argue against that, because most people they want to journal on a book and paper, which is fine. Like I said, just like you're writing diary. But how many books and papers can you write on? You have unlimited trades. You can't write on one book forever. Your page will finish. You run out of pages, you run out of ink. And sometimes I find it personally very hard to flip through notes and to try and extract data from those notes. Honestly, when I write something down, I feel like I've written it into my memory, and I don't feel the need to review what I wrote down. Not necessarily. The other way people journal, they use Notion, which is also a good place for storing data and for storing captures and storing images. But Notion has never been good for data analytics. So I decided to take detailed records of 100 trades, meaning I'll be capturing every bit of that trade, from my emotions, from how I feel, to the basic raw data that the trade provides. And for me to get this 100 trades data, can't say I'll wait for 100 future trades before I get my data. The best way to get this data is to backtest. So I decided to combine both backtested data and forward tested data. For those who don't know what backtesting is basically analyzing past market data and executing trades on those past market data or past price action, executing trades on that and seeing if your strategy actually works on market conditions, on different pairs, different market conditions, and just gathering data. That is the basics of backtesting. I'll be backtesting while I also look for that same trading signal or trading setup on current price action. I needed to make sure that every bit of data that was captured in this process was neatly, accurately, and efficiently recorded, not just writing on paper or screenshotting and saving on Notion or having a fancy UI to record trades. I needed raw data. And I needed that raw data at a glance. I don't want to flip through pages to get that data. I don't want to scroll through multiple images to get that data. I want to one look and I have seen what I want. That was my aim. So for this, I needed to get the right tools. For backtesting, I use forex replay. Some people use TradingView for backtesting, and there are other backtesting tools, but for me, the best I've used so far is forex replay. This is an incredible backtesting tool. It is smooth, lets you backtest as far as you want, like as far as you want. It has a very good UI and good analytics too. It's a paid software, yes, but you can get started for free. And mind you, it is also very cheaper than other alternatives like TradingView, for example. For data collection, which is the most delicate part, I was using everything. I had to create a spreadsheet for this set of questions that I had, like entry models and time of entry, how long I should hold trades. My spreadsheet was to answer those questions. I also use Notion because I originally started using Notion when I started trading, and I've saved basically all my trades there. Just that I was not getting the type of data that would aid me. But I continued using Notion because I'm going to also save all the snapshots of my trades there. And I wrote down and didn't use a physical book or paper because I always run out of books and I've written on thousands of books. I don't even know where they are. So I didn't think it's useful to use book and paper to journal trades. Instead, I created a place in my spreadsheet where I write out what I feel, my thoughts, and observations regarding setting trades and all that. And with these tools, I had all that I needed to conquer this challenge effectively to the best of my ability. So now let's go and see how it turned out. Let's see how it transpired. So I kicked off this challenge, this process, and everything was good at first and started very good, enthusiastic. I was very enthusiastic and pumped up, like, yeah, I'm finally going to fix all my problems in trading and I'm going to be profitable forever. But yes, this process was going to reveal a whole lot to me that it actually gave me very, very good closure and very good understanding of what the future will be like if I continue trading, or what the future is going to look like as a trader. Every trader had to follow the exact same rules. My checklist, I had to create a checklist of those rules, those confluences, and different signal signs that you want to see in the market before you want to execute a trade. So I got started. The first 10 trades shocked me a lot. 8 winning trades and 2 losses. And I was like, whoa, wow. And this was me trading what I know, not like I learned something on YouTube. This was the same like trading ideology I've had for like almost 2 years now in trading. The same ideology, nothing fancy, nothing too complicated, simple stuff, you know, simple change in trend and change in market structure. That was what I was trading. That was what I was looking for. Same patterns and same simple way. I was getting 8 trades, 8 wins, two losses. I was happy with that result, but I realized that was just first 10. So I needed a lot more data than just that. The second batch, I had 3 wins and 7 losses. Oof. That was like 7. I don't. It was not a streak, but I was having like 3 loss streak, then a win, then 4 loss, then a win. Wow. So when I got that result, I started questioning the strategy I was using, if it's working, if it's actually going to, give me consistent profitability or give me a good win rate self. But I realized something, that I'm trying to gather data here, not experience what it will feel like being in that situation of losing 7 trades. I didn't panic and I kept going. Mind you, gathering all these trades takes hours. It takes hours. Like for one trade to come, you might have gone through multiple days or a week of back tested data. You might play out a week of or multiple days. So on that key information I got was my trading frequency, which looks more like once a week. So imagine 10 trades, 7 losses, 3 wins. That was over probably 10 weeks of trading, and you lost 7 times that period. You lost for 7 weeks and you won just 3 weeks. But that 3 weeks was still enough to put you on profitable levels, on profitable numbers. You get, so that three wins, because my risk to reward, my average risk to reward was 1:4R. So 3 wins was enough for me to still be profitable after 7 losses. So that was reassuring for me, and that was good for me to know. So with more trades I took, certain patterns started appearing. I was noticing more things. I was defining my strategy clearly. I could spot it clearly. And it was like my trading system came alive and was talking to me and showing me and teaching me things that I never knew and always misunderstood. The biggest thing I gained from this experience was not a higher win rate. Although my win rate now I know it's around 56%, and it's actually very good for me with a 4 hour like 4 weeks to reward, with a 1:4 weeks to reward, and a 50% win rate. That's very good. That's actually very good for me, because if I look at when I look at my prop firm data, my win rate there is like 30%. I think that kind of affects me mentally, because I feel like I will lose more than I win. But prop firm data doesn't accurately capture everything about your trading. So I needed to take myself out of that loop and focus on something that and focus on just the trading, not the emotions that come with it. Just focus on trading. And because my profit data, I was trading a lot of, like I said, I was strategy hopping and moving from one place to another and making some silly mistakes and silly trades. It became clear to me that my win rate is actually on the high side if I just stick to what I know best and what I'm already used to. Biggest thing I gained wasn't a higher win rate. It was conviction. It was confidence. After just 50 trades, I could identify my setup instantly. I stopped stressing about what I should or should not do. I stopped forcing trades. I became more patient after realizing that I'm not just going to be getting trades that often. I cannot get multiple trades a week. I cannot get the best I could do was like probably 2 trades a week, and that's already like I might even lose one. Taking 2 trades a week with a 50%, 55% win rate, chances are high that I'm going to lose one. So I had to accept. I accepted all those facts and realities, and it made me just cool down, like just calm down, just like they poured cold water on my body. I was like, oh, zen. So at this point, I knew exactly what I want from the market and what to expect from the market. The market didn't change. Multiple trades, the market stayed the same. The only thing that changed was me. Now I'm proud to say that this exact process has helped me trade my funded account from a 9% drawdown into a 8% profit, and now I'm expecting a payout. Woo! That's what I would have said if I was actually expecting a payout, but I still have a long way to go, and I'm still in the process. I'm still in drawdown, but I'm coming up. Like I said, it takes time. I'm still gathering the data. Hopefully, I want to gather up to 1,000 trading data that I will use. So one thing you should definitely take away from this video is backtesting on its own does not make you profitable. Journaling on its own does not make you profitable. Psychology, risk management, technical analysis on its own does not make you profitable. What makes you profitable is when you are trading based on data. That data gives you confidence, and you know that your confidence comes with evidence. Your confidence comes with evidence that what you know you are doing works consistently over a period of time, over different market conditions, over different markets. It has worked. But to be honest, I traded just pound USD, so I still need to backtest other markets. I'm currently backtesting Euro USD as well, and I hope to backtest Nasdaq and just keep backtesting as time goes on, because I feel like backtesting should also go hand in hand to trading. You should backtest probably every weekend, and every rule that you think you want to add to your trading system should be backtested, and you should get enough sufficient data before you add it. Every change, every new system must backtesting. Backtesting comes before execution. Backtesting comes before execution. Note that. Don't go and watch YouTube videos and execute on those YouTube videos without backtesting and journaling, or without backtesting and bookkeeping. Let's call it bookkeeping because journaling makes it sound trivial. So do not take a trade, do not exercise a strategy, do not execute a plan without backtesting and bookkeeping. Those are the foundation. That is your structure. That is the structure behind your trading. So mind you, without that, you will just be on this roller. You just be going around the circles in circles, and you likely be just bouncing between break even, unprofitable, break even, unprofitable, break even, unprofitable. So this is what will help you break out and actually stay consistent and stay profitable over a long period of time. If you are struggling right now, please don't go looking for another strategy. Just study your own. Study like what you know how to do, what you know very well. Study that, backtest it, keep your records clean and efficient. Master the one you already have, collect data, trust the process, and let the numbers do the talking for you. Because at the end of the day, trading is a numbers game. Hello guys, I'm Ricky Trades. I'm a funded trader with over 4 years experience, and I help new traders to navigate their trading journey to consistent profitability. So do well to like and subscribe if you want to see more of this face. I know if you've watched this video to the end, you've definitely been inspired and you've definitely learned what you should do now to stop losing. Trading is difficult, point blank, especially for beginners, because there's no real, there's no solid one way to get there. There are a lot of garbage out there, a lot of scams, a lot of misinformation, and just clickbait things trying to get your attention and sell you a lifestyle. So at some point it might feel like you are chasing a fantasy, but I assure you that you can make trading success your reality as long as you stay on the right course with diligence, consistency, and discipline. You will definitely succeed in trading. Trust me. You will see now very soon. I will see the update now, sure. It will take you a lot of time, dedication, obsession to become a profitable trader. But the reward for this struggle is true freedom. I hope you feel inspired by this video. Never give up on trading, but make sure to do it right. I'd appreciate your support, so leave a like, subscribe, comment. I'll always love engaging with my small community here on YouTube. And stay blessed, keep trading, and good luck. Bye.